Shares of Tempus AI are trading at $25.47, and they are down around 40% since its IPO just 6 days ago. So should you be loading up on shares, or is this a sinking ship just trying to stay afloat on the AI hype? Is this going to be the next Palantir? Well, for my December 2026 price projection, given the recent IPO, there isn't much historical information to go off of, so I had to go out and find it for myself. For year-end 2023, the revenue per share was $3.22, and because their share price is $25.47, that means their current price-to-sales ratio is 7.9. And as for what we can expect in December 2026, Tempus AI has been experiencing an average revenue growth of about 42% year over year, but the average tech companies are right around 16% year over year right now. So I'm going to take the difference of the two, 29%, and that would mean a revenue per share in 2026 of $6.91. And as for the price-to-sales ratio, the average tech company right now is 5.59, and that would mean a share price of $38.65 at the lowest, which is about a 53% upside. Keep in mind, they're going to have to maintain a year-over-year revenue growth of 29% for the next 2 years, and that is combined with a pretty low price of sales of 5.59, which is great because most AI companies are actually double that right now. So this is a very, very conservative estimate, which I like to do. In terms of other analyst forecasts, I can't find any serious forecasts, but I did find one source calling for 42.48 next month, and I can't say that it's bad or unlikely, but I do know for certain that it is not going to be very accurate, just because, statistically speaking, the shorter the forecast window, the less accurate it's going to be. Anyways, in terms of fundamentals, they haven't had any earnings calls yet, and their debt to equity is negative because the shareholder equity is negative. They do not offer a dividend, but after reviewing their revenue, it does show some really, really good year-over-year gains. Again, 42%, really good. And their TTM net loss of 84 cents a share is sort of all over the place, quarterly and yearly, but it is trending up on both metrics. One thing I will call out is they do have $485 million of total debt and only around $100 million of cash on hand, but only about $7 million of that debt is short term. So obviously, factoring in their access to capital, things are looking really good from a liquidity standpoint. Anyways, for qualitative analysis, I think fundamentals are about as good as you're going to get for an IPO, to be honest. And I'm really, really happy with the revenue growth, but I do question its sustainability because it is so high. But after using pretty conservative growth and valuation numbers, I was able to get a good price projection that I think presents a pretty good buying opportunity at this price point. I would rate it a buy, but there is just a little too much risk introduced when you factor in that negative shareholder equity, which means they have more liabilities than they do assets currently. So for me, it's too early to tell if this is going to be the next Palantir, and for that, I'm going to have to rate TEM stock as a hold despite its promising upside. Anyways, that's all I have for you today on Tempus AI. Please drop a like, let me know what stocks you would like me to cover next, and I will see you next video.